When I first started trading, I had this mistake that I would make $10 and the next day I would lose 50. I would sometimes have 2 or 3 green days where maybe I made $15 to $25 in each day, and I thought, oh wow, finally getting some consistency. I'm up $100 for the day, and then the very next day lose $300. One of the biggest mistakes I made was when I was a beginner trader was my risk to reward was all over the place. I will make a little money and then I'll lose a lot more. And now that I'm experienced in 9 years into this trading career that I've been in, I see that being the number one mistake that beginner traders are making. So in today's video, I want to talk to you guys about the 5 things I've done in the last 9 years from making those mistakes and being unprofitable, inconsistent, and really feeling like trading will never work out for me, to the point now that I make a 7-figure career and help others around the world do very much the same. So make sure you follow along with this video. It's going to be very important. There's going to be a lot of information that I think is applicable to beginner, intermediate, and even advanced traders. As always, if you like this type of videos, this type of education, leave a like, leave a comment, drop me a subscribe button. And if you want to trade live with me every single day, the Discord link will be down below. And just real quick, come on guys, you guys see this black on black, the Big Gains Club hoodie, coming soon near you. So make sure you do all those things down below, and let's get straight into the video. The number one thing that I see people making a mistake when it comes down to trading is their damn indicators. Guys, if you're new to trading, or even if you're intermediate at trading, it doesn't really matter. Focus on your price action. I know the first thing we see is these charts with a bunch of RSI, MACD, EMAs, volume profile, and all these other things, but those are secondary. If you don't understand price action, you'll never understand indicators. So even if maybe yes, an indicator can be good at some point to give you some certain direction in the market, you should not be using it until you master the price action. It's like me playing a game of basketball and I can hit free throws, I can make a mid-range shot, but what am I doing? I'm just sitting behind the arc trying to shoot dip threes like I'm Curry. It's just not going to work. Let me give you an example. From today's trade, I was able to time the bottom. And guess what? All the indicators, RSI, MACD, all those other indicators would have said that, hey, that was a sell position. You should take in a short position. The market was going to continue down. But guess what? Using price action, understanding price action and how stocks like to move, I still got in a long position and I got a better entry than anybody who would have waited for the VWAP, EMAs, and those other things. As you guys can see from my example, we were well below the VWAP, we were well below the EMA. Probably gave a bunch of sell signal to a bunch of people, then went short in the position, and I made money taking the opposite side. At most, you can use 1 or 2 indicators. Sometimes in my chart, you guys may know I have the volume weighted average price and exponential moving average 200 indicators on. And yes, I do have them on, but I'm not only looking at them. They don't tell me when to buy and when to sell. It just gives me some added information to the market where realistically I don't really need. That's why sometimes I trade without them. But beginner traders get fixated. Oh, where is the VWAP? I can only trade where the VWAP is. Or where is this indicator? It's not oversold. It's not under this 30 RSI, which is a complete scam. All the people that are telling you that's what you need to do to be successful are not good traders. I promise you that. If your charts look something like this, which is all these charts, lines, and indicators, and colorful highlighting buy and sell signals, you're not going to be successful at trading. And unfortunately, that's just the reality of it, guys. Turn all those off and understand price action, which brings us to my second point. Number 2, focus on your charting. Guys, the only way to get better at something, it's doing it. If you're just trading because you want to get on the charts and at right 9:30 when the market opens, and the first thing you do is like, I need to take a trade, I need to use up my money to take a position, well, you're going the wrong way about it. You should be spending a lot more time focused on just learning how to chart. Open up your broker, open up TradingView, which is a free platform online, and just try to understand, why did this chart go up? Why did it go down? What made it go sideways? Why did it maybe sell off really hard and then quickly went back up? If you look at a chart, you can't understand anything of what's going on in that chart. It just looks like green and red candles. I'm sorry, you're not even ready to take your first trade. So you should not be focusing on like, I need to take my first trade to make money if you don't even understand how charting works. If you're not learning the basic of charting, guys, you're wasting a ton of your mental capital on trying to look for these trades that are going to lose you money, which is going to make you upset, which is going to make you blow up your account and eventually quit trading. As I'm sure that all you guys are working hard for your money, your 9-to-5s, your jobs, whatever it is, you're working very hard for your money. You should not be okay with separating and taking bad trades because you're unwilling to put in the time to learn. But also, that is why sometimes investing in yourself, invest yourself in a course, invest yourself in a Discord chat room that makes sense for you and you like someone way someone teaches, because that lets you skip a lot of mistakes that you could have made if you were on your own, right? Invest in your education, investing in that time into looking at charts, understanding why the stock moves a certain direction. And if I would give a tip for you, the number one thing you should be understanding after price action is supply and demand zone. Now I have other videos on the channel breaking down the supply and demand, how to understand where they are, where market may be going if it hits a certain level, and how to know if the bottom or the tops are in. It's something that I extensively talk about without using any damn indicators. Basic understanding of the price action, how you can anticipate the move in the markets. Number 3, risk management. And this is probably going to be one of the more important ones. Risk management is risking money where you could make more money rather than lose more if the trade went against you. What do I mean by that? Remember in the beginning when I told you I will make $20 and then the next day I'll lose 50? Well, that's not good risk management. If I take a trade, I should be able to make more money than if I lost the trade. So let's say I take one winning trade and I made $20. My losing trade, I shouldn't lose more than $10. That means even if I win one and I lose one, guess what? My capital is up. I still made $10. I still made 50% into the green with those two trades combined. Now, a lot of beginners do, and it's a mistake that we all make, so it's okay if you're doing it. Just be aware of it and understand that, is that we'll see a little bit of green. You see our prey up 1, 5, 10% if you're trading options, and we just want to take it. We see that green, and we're like, I just need to take that green. I'm scared. I gotta get out. I gotta take my money. I made some money. I'm happy. I need to go spend it. But now the opposite happens. They see a red trade, -10, -15, -20, 40, 50, and they're just holding and praying it'll come back up so they can get out break even, right? Get out at a very, very small grade. That's negative risk management. It might have worked at one time or a few times. You hold the play from -60, comes back and goes into the green, and because that happens 1 or 2 times or every so often, you think every play will be like that. Well, guess what? If you're taking a profit at 10% and you hold just one and -50%, it means you need 5 green trades just to make up for that one red trade. That's terrible risk management. That's a terrible mistake that you're making. What you need to do is, number 1, turn off your profit and loss. You know that little thing, if you know every broker does it, but if you can't turn off how much you're making and how much you're losing, it will help you calm down and just focus on the charts more. Because seeing that green go up and down, it's gonna scare you. You're gonna quickly wanna take it. You're gonna quickly hold that. Turning it off, if your broker allows it, is a great tip to help with your risk management. Your risk management should be at the worst 1 to 2. What do I mean by that? That should be like you're risking $1 to make $2. So like I said, if you have a 50-50 win rate, 50% of the times you're winning, 50% of the times you're losing, you still end up making money on that day. So having a 1 to 2 risk reward is the bare minimum. Having a 1 to 3, 1 to 4, 1 to 6, the better, the merrier. That means, let's say you have 1 to 6, you can just be right 20% of the times. That means out of 10 trades, you take only 2 that are green and 8 are red, but you still be green on the day. That's the magic of risk management. For my trades today, as you guys can see, I'll look at my SPY calls from the bottom. That was a very well over 1 to 2 risk reward. And then if we look at the IWM trade that we took today, all live on stream on Twitch, it was a 1 to 4 risk reward. That means I could have those combined are 2 to 6, right? That means I could have taken 2 trades, be wrong with 6, and still be green on the day. Luckily, we went 2 for 2, 100% win rate, with great risk reward. You need to be focusing on your risk management. When you enter a position, before you enter, tell yourself, where would I close if this trade didn't go my way? Where would I close at? If this trade does go my way, where will I take profits? And if where you're gonna lose to where you're gonna win, it doesn't meet a 1 to 2 criteria, then maybe you should not be taking a trade, right? So make sure you're focusing on that risk management. You gotta be patient with your trades, and if it doesn't meet your criteria, guys, who cares? Just move on to the next trade. The market is always there, but if you blow up your account won't be there anymore. So make sure you're saving your money and just taking high quality trades. Number 4, consistency and discipline. What do I mean with 2? Consistency, number 1, just The other things we talked about, you gotta stay consistent. You're not gonna be one day look at your risk management and do well, and then the next day just completely ignore it and be inconsistent. You need to be consistent and disciplined to the rules that you set yourself. Have a little notepad, have a little note screen somewhere. If you're more into the digital stuff, just write it down somewhere in your hand before you're trading anywhere. The rules that you're gonna follow for that day. Everyone should have a set of rules. Everyone should be understanding what the rules are and follow them accordingly. I know rules are meant to be broken, but not in trading. To have discipline, mental discipline to only take high quality trade, to not FOMO into any position, because you always understand there's a next play, there's a next trade. If you see something go up 10% a day, guess what? More than likely, tomorrow or the day after, you'll find something else that goes up 10% a day. That's a mistake I made when I was younger, but I don't make anymore, because I used to see a play go up 100%. I'm like, oh my god, that play went up 100%. If I don't catch it now, I'll never find anything like this. The next week will come around, another trade will go up 100%. Next week come around, and again, and I will notice, well, this kind of happens every day to every other day, every once a week. Happens very often, these huge moves. So there's not one single trade out there that would have been life-changing, and pretty much they never would have happened again. Also, remember that old Bruce Lee quote: be scared of the man that practices one kick 10,000 times versus the man that practices 10,000 kicks one time. It goes back to being consistent with your trading and consistent with just your skills in general. Lastly, number 5. This is a marathon, not a sprint. Don't go into trading and thinking in 2 months' time you need to be some huge 6-figure trader, because that's what you see on the internet. The reality of it, that a lot of these people are lying, a lot of people are fake, and giving you a fake image on what trading really is about. It took me over 4 to 5 years to become profitable. So if you can ask yourself, if I can stick to this, be consistent, paper trade, follow my rules, start small, and slowly grow this for 4 years, am I willing to commit that? Or no, it needs to be done in 3 to 6 months. I need to be making tons of money in 3 to 6 months. If you tell yourself that and you can be patient and wait 4 years, and this marathon versus a sprint, then this is probably not for you. The issue with trading attracts a lot of people that are looking for what? Get rich quick. And unfortunately, this is probably one of the least things that are to get rich quick scheme. It needs to take the year. Imagine yourself like a tuition. Were you willing to get a degree and go for 4 years college? Yes. Okay, then take the same mentality and bring it into trading. If you're not willing to make a commitment to at least 2 to 4 years like you would with a college degree, then more likely this is not for you. And that's completely fine, guys. Trading is not for everybody. Just like I could probably never be a doctor. I don't have nice steady ends. I don't want to deal with people's body parts. I'll be awful at that. So someone forced me, or I forced myself to become a doctor, I will be a terrible doctor. Just like you guys might not be fit for a certain career, or you might not be fit for trading. And that's completely fine. You can't stay out of the markets. Just focus on long-term investments for you to create wealth and other things. Now, if you like the trading career, if you like the grind, if you like to look at charts and all these other things, then it's going to be a great career for you, and you could be making millions of dollars in the future. But it's not meant for everybody, and it's totally fine accepting that. So that's the 5 tips I can give you guys that I've learned in my last 9 years of trading. Hope you took notes. I hope you rewatched this video. It was the first time around. I'm sure you missed a ton of stuff. Drop a like, drop a comment, and as always, peace.